Good morning, everybody. Now, it's not that bad. Come on. Good morning, everybody. Good morning. Oh, see, we have this big room. It's very deceiving. So let's go ahead and get started. For those of you that do not know who I am, my name is Tammy Abernathy, formerly Tammy Garofano. Happily now Abernathy. So you can definitely see my contact information has changed at the end of the presentation. We want to thank you for joining us for session 15, which is reporting for your campus-based programs, assigning loans to the department, and reimbursing for service cancellations for the federal Perkins Loan program. Typical to most of our sessions, it's really heavy factual information and a lot of content, so we'll be moving through some of the things rather quickly. I'm happy to report that Alana Nelson, who is part of our campus-based operations team and a subject matter expert for the campus-based programs, will be our co-presenter today. We're navigating a journey, folks. Just like General Brown said, we're on a path and we're going to get to the end. Our end is the Emerald City, lunch, questions. My Emerald City version might be different than your Emerald City version, but I'm going to get to those ruby slippers, right? Rest assured. And there will not be any witches along the way, or tomatoes, or flying monkeys. So you're only going to see our crowns and Glenda the Good Witch with her magic wand to answer all your questions today. So without further delay, Alana is going to share her wisdom with us, and she'll provide some extremely important information about what I like to call the other F word in financial aid. Oh, come on, that was funny. FAFSA, which is the first one, and then FISAP, which is the second. So please join me in welcoming Alana to the stage.
Okay, I guess I'll get up then. Good morning, everybody. All right, so before Tammy dives in to her various Perkins updates that are in store for you guys today, we wanted to be sure to cover some general FISAP reporting reminders that impact all programs, and we have a lot to cover, so I'm going to just dive right in. So the FISAP is the reporting tool for the campus-based programs. As you all know, you must submit it in order to apply for SEOG and work-study funds for the upcoming year, the application year. And you need to submit it in order to report on your expenditures for the prior year. And for schools still servicing their Perkins Loan portfolio or that have a third-party servicer servicing their portfolio, you need to continue to report on all of that activity for the reporting year. So it's a beastly document that is only made more complicated by the fact that it sort of spans this 3-year period where, at least in the case of SEOG and work study, what you report for the reporting year, the prior year, impacts your eligibility for funding for the upcoming year, the application year. So 2 years ahead, and then in between during the current year is when you're actually submitting the FISAP and required to meet some other campus-based deadlines, and we are in turn completing all of our processes with that data. Also want to clarify something else that's complicated about campus-based is that we refer to the FISAP by the application year, which I know is counterintuitive to you all. So when we're talking through this presentation about the 2021 FISAP, that is the FISAP that you just submitted as of October 1st, in which you applied for funds for 2021, but it was the fiscal operations report for the 18-19 year. So complicated, I know, but you get used to it eventually, I think. We want to put a couple of dates coming up on your radar to look out for. The FISAP corrections deadline is coming up, I think, in 8 days from today. It's usually the 15th, but the 15th is a Sunday this year, so it's Friday the 13th. Every year you're given this additional 2.5 months to review, double check, validate, and correct and resubmit your FISAP as needed through that time period. And there are a couple items we'll expand on a little bit, but you need to use that time, if you haven't already, to reconcile your reported SEOG and work-study expenditures with G5. And you also need to use that time to review any validation edits that you might have hit on the FISAP and make sure that those are addressed and reviewed. Tentative awards will be posted by January 31st, and I think Tammy's going to expand on that a bit as to why that's very important to pay attention to. The underuse waiver deadline is coming up on February 3rd. This only applies to your school if you were not able to spend at least 90% of your SEOG or your work-study authorizations for the reporting year. If you have to return more than 10% for a given year, then your 2021, your application award will be penalized, reduced by the amount that you had to return in the reporting year unless you apply for the waiver and are granted and approved that waiver. Also not on the slide, but this is coming up in early February is when we close out the reporting year in G5. So we close out your FWS and SEOG authorizations for 18-19 in G5 to match whatever you reported on your FISAP as expended. So if you report that you spent $45,000 of your $15,000 SEOG authorization, then come early February, we're going to go into G5 and reduce the authorization down to that $45,000 amount that you reported. So as I said, the FISAP is the reporting tool for the campus-based programs, and it's entirely self-reported data, which makes campus-based somewhat unique from most of the other Title IV programs. And so, needless to say, we very much rely on that data to be accurate. Our campus-based team that looks over FISAP data is a team of pretty much 3 of us currently, so needless to say, we don't go through every school submitted FISAP line by line. And even if we did have the resources to do that, we don't have access to your school's records, so we can only validate accuracy so much. So there's a heavy burden of responsibility on you all to have procedures in place that allow you to reconcile these programs on a monthly basis so that when it comes time to report on the FISAP, you know that what you're presenting on the FISAP aligns and is supported by your school's records and documentation, and that all systems align. And not having those procedures in place obviously leads to inaccurate reporting, and when that's happening on a consistent basis, that of course speaks reflects poorly on your school's administrative capability and ability to manage these funds, which comes with a host of other unwanted consequences down the road, such as program reviews, liabilities, heightened cash monitoring. So those are all things you want to avoid. So if you're new to the programs and you're trying to get some of these procedures off the ground and learn how to manage these funds and report accurately on the FISAP, please come see us. That's what we're here for, to help with those things. So I'm going to quickly touch on a few key reminders about each part of the FISAP. Part 1 is just essentially demographic data, basic data, but it's also the signature page where your school's president and CEO is signing off on the validity, the accuracy of the data that you're submitting. This impacts many schools, so I just want to quickly point out that the CEO, president information that pre-populates on the FISAP comes from what's on your school's program participation agreement. So if you're submitting the FISAP and then you're going to complete the signature page and you see it's a prior president information, you need to first make sure that that information has been updated on your school's PPA. And if it has been, then you can go ahead and cross out the old president's information, write in the new, and have that person sign, and just provide us with a quick note on your school's letterhead explaining that the PPA update was made and this is the correct person signing when you send in your signature page. Part 2 is the application to participate portion of the FISAP. In this section, you're not only requesting a dollar amount of SEOG and work-study funds that you're hoping to receive for the application year, but you're also reporting on various data from the reporting year that involves your enrollment, your information about your eligible aid applicants, tuition and fees collected, Pell expenditures made. And we ask for that data because it all is actually utilized in the campus-based funding formula. So that essentially determines of the pot of funds that are available to award to all schools, that information is used to determine your school's share of eligibility for those funds. Part 3 through 6 then is the fiscal operations report portions of the FISAP. In Part 3, I think Section A, the cumulative fiscal report, is probably what gives most folks the most headaches. And so just a couple reminders about that. That is intended to be a snapshot of your school's Perkins ledger activity as of the June 30th reporting year. So it should reflect all cash that's come in and all cash that's gone out of your Perkins fund. It's also cumulative information, so it should not go down. No fields in the cumulative section should be going down from year to year. The only reason that would happen is if you've actually identified some sort of reporting error that occurred in a prior year. But otherwise, these fields should be staying the same or increasing. And it's not enough to just take the information that's been provided to you by your third-party servicer. You need to refer to your school's ledger and identify any discrepancies that might exist and make sure that you report accurately. Parts 4 and 5 are where you're telling us how you utilized your federal authorizations for SEOG and work study, whether you carried funds forward, back, transferred between programs, how much was spent on students or ACA. And just to keep harping on the same point, however you report on how you utilized your funds must be supported by your school's documentation as well, your school's records. So if you reported that you carried forward $2,000 in SEOG from 1819 into 1920, your records should reflect that you drew down that $2,000 and you dispersed it on students in the 1920 year. In section E of both parts 4 and part 5, those are two automatically calculated fields that it may be easy to kind of gloss over just because you're not asked to manually input any data there. But those fields are calculating of the federal funds that you were authorized to spend, how much did you spend and how much did you not spend. Field 18 in part 4, field 19 in part 5 are the unexpended funds. So if you have a value there based on what you've reported in the earlier sections, then that unspent, unexpended funds amount should also be sitting in G5 and available for us to take back when we close out the year. So that sort of touches on what I was speaking to about completing before the December deadline, is making sure that you reconcile that information with G5. Part 6, I don't have much to remind folks of here. This is where you're providing basically a breakdown of your recipients for SEOG and work study based on income categories. Just a reminder here that you're reporting on combined federal and institutional funds for these recipients, so that when the totals are automatically calculated, those totals should match what was reported in parts 4 and 5, as well as the total expenditures to those students. It's the only place on the FISAP where we really get a recipient count, so this data is mostly used for research and analysis purposes. And then speaking of validation edits, this is as well what you need to check for before the December deadline. The FISAP has various edits built into it, designed to look for and try to catch inaccuracies, potential reporting errors, major discrepancies between, say, the information you reported on last year's FISAP versus this year. In some cases, there's perfect explanations for those issues, and you do have the ability to provide those explanations. But you just want to make sure you do go back in, and if you did hit any edits, carefully look at the data that prompted those edits and make sure you didn't have any key-in errors or anything of that nature. And now I get to turn it back over to Tammy to take you through the rest.
I think she's happy about that. So Alana mentioned previously about reviewing your tentative awards and some actions that you're supposed to take at the institution level. You're going to want to reconcile your expenditures, and you have to do that by December 13th. So we're going to shift gears and talk about the 3 R's: reconcile, review, and request, right? Those 3 things are critical for you to get the funding that you're supposed to receive at your institution. So you want to look for drastic changes, and you also want to make sure that what you've actually drawn down is reflected, because that really could have impacts going forward. So institutions with balances in their G5 account after the closeout are not fully reconciled. We see this quite frequently. So your financial aid administrators, you must work collaboratively with your business office partners to make sure, or your third-party servicers, to ensure that the complete reconciliation has occurred. If you still have a balance in your G5 account at closeout, guess what? You're not reconciled. And we're seeing a little bit of that. So we encourage you to review and reconcile your open balances in G5 and for later years as well. If your school is merging or undergoing a change in affiliation, we have a school participation team that really should be working very closely with you with all of your questions and all of the actions that you need to take to merge those two schools together or change the ownership. Lots of things that go on when those types of situations happen, so we want to make sure that we're supporting you in that effort. So when the tentative awards come out and they're posted by February 1st, we want you to review. There's a theme here. Review those awards before the final awards are posted in April 1st. A lot of activity happens in between that time, and we give you that time to review to make sure that we've gotten it right. Based on the data that you've given us, did we get it right? If you're seeing drastic changes from one program to the next, or there hasn't been an increased appropriation from Congress, but your awards look really reduced, you're going to want to dive in a little deeper. And if you need help with that, please feel free to reach out to our call center and walk through, and they'll escalate it. Should they need to escalate it to Alana, they'll escalate it to her. Generally, increases are not considered after April 1st. We've posted the final, and decreases, it's something about we'll always decrease it, but we won't always increase it. So, just got to take a look at it. This graphic is basically a representation of what goes into the path of funding. We typically haven't spent a lot of time on the funding part of things, where we explain it to you a little bit, because there is a statutory formula that goes in there and looks at your information and decides how much of this information you're going to be able to, how much of the funding you're going to be able to get based on your student reported data. But in this case, there's a path where you've got to look at it, you've got to correct it, you've got to validate it, and then we're going to give you tentatives. And then yet another time, we want you to look at it again and make sure that it's accurate, because your awards cannot be increased. When we have exhausted that money, there's no more money for us to give you. So it is critical that you take a look at that and make sure that it's accurate. So in the Perkins Loan section of the FISAP, Part 3, Section B, Field Number 2, we added a question, permissible servicing costs. This will include routine billing for non-defaulted pre-collection loans only, okay? And so you should not have had anything, well, you should have the first year for you to have reported it was this year, and you would need to do an analysis based on your portfolio, whether you are servicing your own portfolio, or you have a third-party servicer, or you have some combination thereof. But these are servicing costs for non-defaulted loans that were paid within the year, okay? These are also costs that are not reported anywhere else on your FISAP in Part 3. You are going to include the loans that are in sections, you're not going to include the loans as reported in default on Section 3, Part 3, Section C, 5.1 through 5.4. That is where you're going to report your loans. If your loan is in a monthly billing status, you're going to have your 240 days. If your loan is in a quarterly billing status, or your student's loan is in a quarterly billing status, you're going to look at days 270 and above. Any loan that is in default that no longer qualifies for the benefits, because we have some schools that retain those loans for a little bit longer. The purposes of this question is not necessarily the 270-day default date. What this is if it's reported as default, right here you're not going to include those servicing costs. Okay? So for the purposes of this exercise and our data and what you're reporting to us, you will use these field positions for any loans that are not represented into these 4 field positions. You will include costs that have been paid in 2018-19. So you're not going to get a bill, maybe a bill that's forward. Sometimes your servicers might bill for activity that's coming. This is actual servicing costs that came out of your pocket for this particular year, or your third-party servicer. Pre-collection routine billing costs include written notices, annual statements of accounts, requests for deferment, requests for cancellation. The Scarecrow has asked me to elaborate on this a little bit more, so I decided I would do that for him. Thank you, Scarecrow, for asking. You do want to make sure that it's your routine billing costs, okay? We can elaborate a little bit further and talk about what you're not supposed to include. These would not include collection costs reported elsewhere in Part 3, Section A, line 34.2. They're not costs that are paid by the borrower, and they are not insufficient funds. That is a borrower fee for collection, but you're not going to charge those collection costs because those charges should go to the borrower, okay? We encourage, as much as possible, permissible costs to the borrower. It's the borrower's responsibility for this loan. Costs that are chargeable to the fund, you're also not going to include those. Part 3B13 is yet another question that we requested this year, and I'm happy to report that while you didn't have to report on it for this past FISAP, you will have to for the next year, and we'll get to that exciting news later. So this is the reporting the cancellation reimbursement that your institution will receive for the 19-20 award year, and it will be on the 21-22 FISAP. So for NSLDS, you know that this is the only system that contains Perkins loan level data at the borrower level, right? We know that this is the only place that we have a record that this loan exists. You at your institution, it's self-reported or reported by your third-party servicer, and the data must match the institution's records. Data quality is critical. You heard, or maybe you didn't hear, Cynthia Hammond discuss in the opening session that you must update NSLDS. That is part of your administrative capability. Unfortunately, what we are seeing are schools that have not updated their loans. Maybe it's because the loans errored out when you tried to report on them and you weren't able to get that loan on NSLDS. Maybe your servicer is not working those rejection reports or those approval reports like they need to. It is still a combined effort. If you're servicing or you have a third-party servicer, you must make sure that the data on your institution's records, your servicer's records, match on NSLDS. When we're moving to wind down this program, it's going to be even more critical that that data match. You want to make sure that it's properly reported, that it's updated at least monthly. We talked a little bit about this last year, but we did publish an EA on October 4th in 2018 that talked to you, that spoke to you about what your administrative responsibilities and reporting requirements are. For those of you that were not here last year or do not remember this reference, I encourage you to go on IFAP and pull up that EA. It has a lot of information, much of which we won't really be discussing today. So really, if you have questions, please feel free to ask us. There's also still the current data provider instructions out on NSLDS. I've listed how you can get to that. It seems to be, we've had a lot of concerns where they can't really find the NSLDS information when you're trying to look at it and talk to your servicer about that. So it is on IFAP, and I gave the section that you can find it. You can also access your reconciliation report, which we encourage you to do on a regular basis. And you need to, again, match what's on your school system, your servicer system. You guys are the record you're the ones that we have to turn to know what's going on with this program because it's part institution and part federal. You can have an ad hoc report, or you can schedule it as a pushed monthly report. So again, you're going to reconcile any discrepancies, you're going to reconcile the records, and these must match. There's a theme here in case you don't get it. We must match these records, and it needs to be done at least quarterly. So to assist institutions, and this is some really exciting news, and if you attended any of the NSLDS sessions, you heard this, so I don't get to have the thunder, but if you didn't, then you're hearing it for the first time. So we have decided to relax some of the current edits in reporting an NSLDS when the schools or the servicers are reporting on them. And this is going to be very helpful when it's a 65-year-old program and it might not have everything that you need. So we are going to, I think there's about 20 edits that are going to be relaxed. So that's going to help you as you move towards assigning your loans to us in the future, if you so choose, or if you have to based on the new rules. And we're going to offer some webinars and some demonstrations to help you understand more about NSLDS. We hear quite frequently that it's really hard for the schools to report on NSLDS. I don't know that because I'm not on that side of it. So if you guys have some pain points that you think we could do a better job at walking through and helping explain, please come up to Alana and I at the end so that we can write these down and go back to the team and create the tools and the services that we need to so that you can do your job more effectively and efficiently. So this is the Jeopardy round. Whose responsibility is it to accurately report, update student loan Perkins data? Huh? Louder. Yes. It is the institution's responsibility. We wanted to kind of put something funny in here to kind of keep the momentum going, but all kidding aside, we're hearing a lot of schools that say, well, I just let my servicer do that. That's great. We have full faith in your servicer. But it's your responsibility to make sure that that servicer is doing what they need to do, what you've contracted for them to do, or it's your job to make sure your school is doing what you're supposed to do under your administrative capability. So to the fun part of our session where we start talking about money. I always think it's fun to talk about money. We were required, per the statute, to call for the distribution of assets. Last year, we did not do that because we wanted to take a step back. We heard you. We heard the community say, why are you going to call money from us if you still owe us money? Why can't you take a look at that before you call for the distribution of assets of the revolving fund? So I am happy to report that the Secretary has exercised authority for us to reimburse for service cancellations absent an appropriation. We published an electronic announcement on September 10th, 2019 that announced that we were going to be reimbursing for service cancellations and that you should expect to hear more details, in which we did report and provide another electronic announcement that listed some timelines, that listed what the formula would look like, and talked about a little bit more in detail what the Perkins service reimbursement would be. So we will begin notifying you after the FISAP correction deadline. For those of you that are working diligently with our campus-based operations team back at the office, you've been notified that you might have a couple anomalies on your Perkins reported data. Please go ahead and look at that. Take this very seriously. We will not be able to reimburse you for money if your FISAP data is not accurate. So if there are anomalies that you're not looking at or you don't think they're mistakes or something like that, take the time to dig into it a little deeper. Contact the COD call center, get your situation documented so that we can reach out to you and help you if there's some serious implications with your FISAP data. We will reimburse institutions that the biggest thing here is if you have cash on hand reported June 30th, okay? You submitted that on your FISAP. We will not be looking at the October 31st cash on hand. We are looking at June 30th. If you service your portfolio and if you are liquidating your Perkins portfolio, we will reimburse for service cancellation. If you have liquidated your portfolio, we will not be reimbursing for service cancellations absent an appropriation, because we're not permitted to do that by the statute. So you're going to remove and return the following from the fund. We're going to notify you what the institutional share that is owed to your institution, and you're going to take that out. We're going to tell you to take out the reimbursement for service cancellation, partial or full. In some cases, depending on your cash on hand, you may get reimbursed fully this first year. So again, it's really important that your cash on hand reflect the accurate amount from June 30th, as well as the rest of the cancellation information, which is from 17-18. So the difference here is our cancellations that you report on your FISAP are from a period in time in the past. We validated that information. That routine job gets generated when we run final funding. So previously, when we reimbursed for service cancellation, it was a full appropriation, and it was a full appropriation of both the federal and the institutional share to you. What the Secretary has allowed us to do, absent an appropriation, is reimburse you your institutional share. So instead of you sitting here and giving us money back, and then us turning around and giving it back to you, and you reporting it how you used to, This time, we're able to just say you're allowed to remove the institutional share of your service cancellation reimbursements up to the amount of your cash on hand and up to the less your institutional share that you're owed, and then you'll return what we tell you your federal share is, okay? Schools are protected. It will not impact at all the formula, your percentages, and we'll talk a little bit about that in a minute. So what you should do is make sure that you remove and return both the institutional share reimbursement for service cancellation and then the federal share when we tell you when that deadline is. So I would say probably very close to the end of December, which will be around Christmas time, or maybe the first part of January when you're coming back and gearing up for the next semester, you're going to get a notification from us. And you're going to have till the end of February, the middle to the end of February, to do all of that reimbursements. It is critical that you remove the funds when we tell you to remove them, though. Don't keep them in the fund. That money can't sit there any longer. It has to be removed from the fund. The good thing about the institutional share and the reimbursement for service cancellations is you get to use that money however you want. So if you're a savvy financial aid administrator and you get to put those dollars back into your financial aid operating fund or a scholarship to your students, you can do whatever you want with that money. You just cannot, obviously, keep it in the fund and make new loans. You should not remove anything until we tell you, though, because if you think you know what you're getting back as a reimbursement, that might not be the case. So please let us tell you what to remove. And we're hoping we have a considerable amount of funding available to reimburse for the service cancellation, so we're really hoping that we'll be able to really do a lot of schools, make a lot of schools whole. So you know the proportional share formula considers all the changes to the ICC, which is the institutional capital contribution, matching requirements over the course of time. And it will also take into consideration any overmatching that you did. We stopped funding, we the government stopped giving you money a long time ago, and you had to infuse your own capital into this program. By infusing your own capital, this formula protects your dollars. So you don't have to worry about, oh, am I going to get my share back? And am I going to get my reimbursement back for service cancellations? Our formula protects your overmatching, and it protects the ICC that you've put in over time, and it gives a net amount of what the federal share will be and the institutional share will be. You'll be reporting cumulative amounts of both what's repaid for both the federal share to the department from the past and the institutional share to the institution. And so this information that you report on the FISAP every single year is what we will use for that formula. And that formula will stay the same. We've respected the integrity of the formula even with the reimbursements this year. So we do have a heart, just like the Tin Man. We didn't impact the percentages, which means your percentage stays the same. So we're not going to reduce your percentage. We're not going to say, oh, school, you don't get as much as you put in there. As long as you are still actively collecting on the portfolio every year that we have the distribution of assets, you will get your institutional share back. It may take a long time to get every dollar that you put in there. We understand that completely. But you did that. Your school chose to participate in this program and chose to infuse capital, so you will get those funds back. This is just a step timeline of the activity from the distribution of assets process. You've submitted your FISAP. You have corrections until December 13th, yet another theme here. Your notification letters get sent around after 12/13. You're going to return the institutional share to us by February 18th, 2020, so mark that down as the deadline date, that you have to return money to you, return money to us, return your service cancellation reimbursements to yourselves. The only amount of money that we want you to put through G5 is the federal share that we tell you on the sheet of paper that you get your notification on. School X, you owe $100. Please do not give us your institutional share through G5. We typically can't give that back to you. It's like an act of Congress, all pun intended. So we want to make sure that you're only giving us through G5 the money that are entitled to us. And then next year on that FISAP, you're going to report this information again. We will be adding a couple of questions on the FISAP, or we're tweaking them a little bit, maybe not adding them. And so next year's FISAP, you're going to want to really take a good look at the instructions, and you're going to make sure you understand how to report this information. So we're going to start talking a little bit about assigning of Perkins Loans, something near and dear to my heart. I'm sure it's near and dear to yours as well, or at least I hope it is. But when a loan is assigned to the department, the school loses, it transfers all rights and responsibilities to us, it relinquishes your right to any institutional share, and it should not incur any additional expenses. So you're permitted to assign a loan to us at any time in any loan, in default, non-default, National Direct Defense, Perkins Loans. You are permitted to do that under the statute right now. However, we have, as part of the wind down of the program, the Secretary has exercised her authority to require assignment of all loans that have been in default for 2 or more years. So when I talked a little bit earlier about those loans in section, Part 3, Section C, 5.1 through 5.4, all of that information, all of the loans reported on that FISAP that fall into those defaulted categories, the ones that are 2 years and older, you'll be required to assign to us. So you're only required to assign all your loans to the department if you've lost your participation to participate, you have a cohort default rate of 50% for 3 years or more, or you're closing, or you've decided to liquidate your portfolio. We're looking really hard at setting the stage for the wind down of the Perkins program. We don't believe that it's going to come back. If it comes back, it will probably be some different hybrid if that happens at all, and we've heard nothing about that at this point. So our directive from the Secretary is to put steps in motion that will help you as you age through your portfolio. What this doesn't mean is we want your good debt, because we want you to be able to collect on the loans that you are actively servicing and are performing. However, if you do not have an acceptable collection record, and we'll talk a little bit more about what an acceptable collection record means, this call for these defaulted loans is not meant to be punitive. There was some concern that financial aid officers felt that we thought you weren't doing your job. That is not the case. We know despite your efforts every day out in the field trying to work with your students to get them to repay these loans, you still are unable to do so. You still have certain things that you have to do as you work through these collections of these loans. But at the end of the day, you've exhausted your extensive collection efforts, and you're still not able to get this loan into a good standing. So what that means is give it to us. We have tools available to us that will probably or hopefully get that bad debt paid off. So what you're required to do is to pursue collection activity for up to 12 months, right? The first pass at what you're required to do. If the loan is still not converted to an acceptable repayment status, or the borrower does not qualify for cancellation, postponement, deferment, then you can litigate, you can make a second effort to collect, or you can submit the account for assignment. I want to take a look at this slide very, very carefully. The way that the regulations read are you can litigate, you can make a second collection effort for another 12 months, or submit the loan for assignment. So when we're talking about an acceptable collection record, what that looks like to us is a school that has done their due diligence, despite their due diligence for 12 months. They can either reservice, pull it back in, get a different collection agency for another 12 months. But after that, if you're not going to litigate that loan, then per the regulations, you've got to submit the loan to the Secretary. You still have to continue to service that loan until it's recovered through litigation, assigned to the department, or written off. It's very difficult to write loans off because they have to be either under $25 or under $50. So we don't foresee a lot of write-offs happening, so that basically leaves you recover it through litigation or assign it to the department. So when we send individual notifications to your institution, we're going to provide you deadlines that the loans must be assigned. You must begin, or you can assign loans now, so you don't have to wait until you get a notification. But how this is going to look on our side, we already have about a list of 20, 25 schools that we're going to begin communicating sometime early January, late January, February. We're going to put it out there, and we're going to say, School X, you've got X number of days, 90 days, I think it might be longer than that, but they're going to tell you the deadline by which you're going to have to assign these loans. So you want to look now at your defaulted portfolio, and you want to make sure that it's in order so that when you get the notification from the department, we fully expect to notify all institutions within 2 years, which is a high order, but we know we can do it. We also have in the front row our federal Perkins Loan servicer, ECSI. They're also at the Resource Center, so if you have questions about our Perkins Loan assignment system or the assignment process in general, the actual details of that, please feel free. And ladies, those are our experts right there. So please feel free to ask them some questions. Alana and I, of course, will be up here at the end of this presentation as well. But these are the steps that you should take now. Look at your portfolio. We will look at, we have instituted something in March of 2016. We heard that it was very difficult for you to find all of the details for your loans, all of the required documentation. Your promissory note might not have all the required signatures. You might not be able to find a true and accurate copy of a promissory note. So we heard what you said, and we worked with our Office of General Counsel, and what we chose to do was try to give you an alternate documentation process. So if you can prove to us through an affirmation of debt by the borrower and proof of disbursement by the school, we will consider on a case-by-case basis every loan. And that's called our alternate document process. I see every one of these, and we review them, and if you can prove that the borrower has acknowledged this debt, maybe they've made payments, maybe they've signed an exit interview form, you can petition the department by writing a letter that says, I'm really sorry that I can't find this Perkins note, or the signature is missing, or the rights and responsibilities are missing. We've searched everywhere, it doesn't exist, please review this loan for assignment. If you have the right documentation, then we will consider accepting that loan. We will assume the risk on that loan. While proof of due diligence is no longer required when you're assigning the loans, that does not forgive you from doing the due diligence that's required in the regulations. So we have some top reasons why files are rejected. You may be able to fix this and resubmit the loan for assignment. So what we would like for you to do is to reach out to us and say, hey, I have a bunch of files, what should I do? And we will work with you and explain to you what we would need, and then you send that in to us and the process works smoothly. What doesn't work smoothly is if you just randomly send us boxes of information and you shove them in 32 boxes and expect us to go through them. We can't do that. We really need your material organized, and we need a letter that explains why we're looking at it. So if your promissory notes are missing or borrower signature, we talked about the alt-doc process. If your loans were disbursed prior to the promissory note or the master promissory note being signed, or your promissory note is missing, that's yet another reason why you should work with us on the alt-doc. If your payment histories are outdated, however, what we're going to ask you to do is give us updated payment histories. So when we talk about preparing your loans for assignment and you're looking at it, and you're working with your servicers, within a reasonable amount of time, 30, 60 days at best, but if you're giving us information that's older than 60 days, we're going to kick it back and say, hey, we're going to need more information. And if you think of it from a consumer standpoint, wouldn't you want your most recent payment information to be accepted and then to be serviced on? I don't think you would want to still owe 3 or 4 months worth of payments that you've already paid. So if you look at it from a consumer standpoint, we really are working on behalf of our borrowers. Please do not tell a student not to pay you while you are working on assigning loans. They have to continue paying until they are notified by the new servicer. If they pay you, you can put it in an account, and when you receive the notification of acceptance of that loan or rejection of that assignment, then you would, if it's rejected, you would process the payments as you normally would. If it's accepted, you're going to bundle the payments and you're going to get them to our federal Perkins Loan servicer. Please don't use assignment forms that are expired. And one other thing that I really want to mention is Please do not have your borrowers sign new promissory notes now. That is a big, big no-no, and you'll have to purchase the loan. We have no more authority to have any new loans. So even though you're trying to cover and have a borrower sign a promissory note, if you put any date on that promissory note after the authority expired and it really wasn't when you awarded that loan or dispersed that loan to the account, that's a violation. So please don't do that. We have seen a couple of schools do that. We very nicely told them, no, you can't do that, but let's find another way to help you assign your loans to us. Please separate your assignment forms based on the disbursement year or the interest rate changes, and you know you're no longer allowed to bundle those loans after, I believe it was 2008. So previously on NSLDS, years and years ago, you were allowed to do one, the first disbursement, and so we'd have an assignment for perhaps 8 years. It's like, wow, that's a really long period of time to have an academic year for your loans. So we kind of ended that several years ago because we've got to make sure that the data matches. A lot of times your bankruptcy information is missing or your judgment documents are missing. We have to have this information to be able to accept the loan for assignment. We've also received assignments for deceased individuals. That's a real hard situation for our Perkins Loan servicer to deal with if by chance that loan gets accepted for assignment because we don't know that it's deceased, well, the borrower, not the loan. It's a hard conversation to have when we have to have a family call us and say, why are you sending this to me? This person has been deceased for 10 years. So please look at your information when you are preparing it for assignment, and if you do have indication that perhaps on NSLDS, if you're looking at NSLDS, which I know you will be, and you see that the other loans are in a discharge status for death, that's probably a good indication to look a little bit deeper to see if that Perkins loan also falls into that category. These cannot be assigned. They will be kicked back to you. And if you are assigning under a total permanent disability, that goes to the NELNET Perkins servicer. So that does not go to our ECSI servicer. So we need to keep those two distinctions there. We do have a lot of information on our campus-based processing page on IFAP. We have a whole assignment section and liquidation section. We have updated the Perkins Loan Assignment and Liquidation Guide. We're really excited. We had a team. The team did a great job reorganizing this document. As you can imagine, it was quite cumbersome. But they did a fantastic job of separating it into what we call the assignment section and then the liquidation section. Because you're going to be assigning loans to us, you don't need to hear about all the additional steps for liquidation. In the liquidation process, it is two parts. It is an assignment process, it is a liquidation process, and that liquidation means the liquidation of the final cash asset and an assignment and a satisfaction of all the open loans on the account. So we had cancer deferment treatment. We are very happy that we have a tool that helps our borrowers that are suffering in this terrible illness. These are for loans that were made on or after September 28, 2018, or they entered repayment on or before September 28, 2018. The borrowers can receive a deferment. If they're receiving cancer treatment, there's no fixed limit, there's no fixed time limit, and there's a 6-month post-cancer deferment. So with this, you already know that any Perkins loan that is in a deferment status qualifies for a 6-month post-deferment. This particular deferment already gives a cancer post-deferment for 6 months. Per the regulations, you now get another 6 months post-deferment. So in theory, this loan will be 2 years. You get your cancer for a year, and then you have 6 months post-cancer, and then you have 6 months post-deferment. So be careful when you're looking at that. One of the other things that I want you to take a look at is look at the other loans that are on the system. This is difficult. We really worked hard to get what Congress gave us out to the public and make sure that these students that fall into these illnesses really do have something that can really help them. Cancer treatment deferment cannot be granted for loans with a treatment period before September 28, 2018, or made before September 28, 2018 that are not in repayment. So if your borrower is in grace or in an in-school status, those loans are not eligible. They will never be eligible because they're not in repayment status. I do want to mention that this particular slide, I'm sure if you pulled it down from the system, it says September 28, 2019. Some very nice person tried to correct my presentation, and I noticed that it was corrected to the wrong date. So I apologize. They have updated it, and they will be pushing it out to the website. So just if you have the wrong presentation, please make sure that you mark that 9, 2, and 8, please. Loans can be consolidated to receive this cancer treatment deferment, but these loans in this particular issue cannot receive the treatment, and that's what we were given. It's not what we chose. Congress passed this, and this is what they chose to give us, and we had to institute what they gave us and we really do sympathize with the students that are in this category, so please remember that consolidation is yet a way for them to receive a benefit. We made it to the Emerald City. And we're ready for questions. But before we do that, I just want to take another minute to talk a little bit about your defaulted portfolio. There's been a lot of concern, and again, I want to reiterate that it is not punitive. There's also been concern that it might impact your cash asset. We're pretty sure that by this point in time that your institutions would have taken all of that information into consideration. It doesn't mean that you haven't done your due diligence. And we all feel very strongly that we know how hard you guys work. We know that you guys are doing a good job, but this program is winding down. So please take a look at your portfolio. If for some reason you feel that you still want to service this, you're going to have to basically discuss that with me. Not me, but my whole PLI team. I'm the peon that you talked to initially, and then I circulate it up. We will look at a case-by-case basis. So if you have a collection agency or your students had made payments recently within 2 years, we're going to look at that. So you'll get information on how to communicate with me and some of the conversations that we can have specific to your institution. So don't be discouraged by that. This is meant to really help you have healthy portfolio. And with that, I think my Ruby Slippers and I are going to sit down and ask questions. So if you do have any questions, would you please come up to the middle so that everyone can benefit from perhaps the answer? Thanks.
Okay, so if you put in a waiver, how long does it take before you hear back about the waiver if it's been accepted?
Which kind of waiver? Underuse?
For the unused.
We release the notifications typically by the end of February or beginning of March.
Okay, so if we get the initial awarding, it may go up then before the final, if it gets accepted?
Right, exactly. If it's approved, then your final award will not contain that underuse penalty, whereas the tentative award would have showed it.
Okay. If there's any issues with the FISAP in general other than that, would we hear soon if there was any other issues, like if we submitted and there were any issues on the FISAP with anything?
Wait, I'm sorry. I don't think I caught that.
If we submitted the FISAP and there were any other issues, I mean, would we hear within so many weeks that we can go back? Like, I know the deadline is coming up.
Yeah, I mean, we perform outreach around a couple of things. I mean, if you submit the FISAP with some certain edits, validation edits, you'll immediately get an email. We'll also probably be doing some additional outreach around that if schools look like they still haven't corrected certain errors. And we also look at expended amounts versus that were reported on the FISAP versus G5. So if it appears like you've reported unspent money that you've actually drawn down from G5, we usually make phone calls and emails about that as well. But that's really where we pretty much focus our outreach efforts. And not all that's going to happen before the December 13th deadline, but you would still have time to make a correction after that if needed by submitting a change request.
Okay, great, thank you.
Hi. This is just, did I hear you correctly? If you've already liquidated your portfolio, you won't get any service cancellation funds?
Yes, if you have liquidated and already broken down your cash asset, you've completed the liquidation process completely. A little redundant there, but you will not be, we are not able to, there's no authority
There's
for
no
us
separate appropriation for it.
yeah, we don't have an appropriation, so there's no money for us to allocate for that.
Thank you.
So, yes.
Hi, I would just like clarification, talking about the alternative documentation when you are assigning loans. You were indicating that those files go to you for review, but if you're using a servicer, they go to the servicer and the servicer reviews the alternative documentation?
You will email the department about the alternate documentation, and every file, we have a whole team that prepares that information.
Okay.
But ultimately, at the end of the day, it is a policy decision to assume the risk, so that comes to my area.
And how long does that, I believe we have done that, and we've sent in some follow-ups, and we haven't gotten responses back for a month or so. So what's normally the turnaround time on that?
So in full disclosure, we had a little bit of a hiccup with one of our email boxes.
Okay.
And, imagine that we lost some access to that and couldn't get into that box to work that. So if you really, if you want to give me your school's name after this,
Okay.
we can take a look and see where we are with it. There is a team of individuals that works on that. They do it as fast as they can. And I do want to mention this, when we have a school that closes, we have to work those closures quicker, right? We just don't have a choice because we may not get the data. So we've had a few big schools that closed very quickly, and it's kind of taken us a little bit longer. But in theory, a couple of weeks. But we recognize we're a little bit behind on that, and we are doing our very best to get through those files as quickly as possible.
All right, thank you.
Yes, ma'am.
I have a question regarding the Part 3 of the FISAP. So that's an accumulation of a lot of history, and some of those numbers might not be correct. So what process does a school go through to correct the FISAP?
Why, thank you for asking that question. I don't want to say a bad word, but it's very difficult. We understand that could have been a lot of staff changes. It could have been, historical data. We encourage you to go through. I just had a conversation with a school last week, and they went through line by line of that cumulative data. And what they had was they had reported a short-term loan to the fund, and they doubled it. And it looks like they made a short-term loan to the fund this year, which you cannot do, because unless you're actually advancing loans, you cannot make a short-term loan to the fund. So of course we pick up the phone and we say, hey, can you explain to us why you made a short-term loan to the fund this year? And they're like, we didn't. I'm like, okay. So they went back with their people, and they went through, and they were able to find about 7 years ago, they doubled reported, and it's been carried forward ever since. So if you find yourself in a situation where you see something that hasn't been right for a while, you're going to reach out to our COD call center, and more than likely, you'll be escalated to the operations team. The two individuals that work on this FISAP are brilliant individuals, and they analyze the FISAP like I've never seen anybody analyze it. I have a new love and respect for them because I don't ever want to do that. But they know their stuff, and they can walk you through the steps that you need to take to fix that historical data. So it may be something that you don't fix the historical part of it, you update it for this year and you make a comment. I won't be able to speak to that process until we know what those errors are. You've got a team of individuals back there that have your best interest at heart, and they will definitely walk you through what you need to do.
Thank you.
Yeah, and one way they can assist, if you reach out to us, they have a query where they can pull your Part 3 data in spreadsheet form going all the way back to the 1998. So it's just a heck of a lot easier than trying to go back and look at every single Part 3 of your FISAP. So it's in nice and Excel spreadsheet form, and you can kind of identify where things might have gone awry.
This question is in regards to the return of excess capital. We're getting ready to do that. Should we wait to hear from the Department of Ed to see what they think that amount should be, or?
So the process of excess liquid capital in a school returning funds to us through that process was actually changed, because when you stopped advancing funds to students, you no longer you have a whole bunch of excess in your revolving fund if you're collecting, correct? So the distribution of assets process replaced the excess liquid capital process. So
I'm sorry, what was that new process?
I'm sorry?
What was the name of the new process?
The new process called the distribution of assets process. I would encourage you to look at the 2 electronic announcements that were published on IFAP that describe the distribution of assets process and the timelines. It explains the formulas, it explains, and it's similar to the excess capital process, with the exception that because we don't protect any more money in the revolving fund to fulfill your commitments, there's no reason to give a protection when you're no longer, there's nothing you can do with that money. So we will give you a notification that breaks it into 3 parts. It will be the institutional share that you are owed based on the historical data and how much you have contributed over time. It will be the amount of service reimbursement that you're eligible to receive, and it will also provide you the amount of the federal share that we are expecting your school to return to us through G5. We'll notify you of that. It should be sometime middle to the end of December, first part of January. You'll have until February 18th to return those funds.
So we should wait to hear from you.
I'm sorry, I can...
I'm sorry, we should wait to hear from you?
Yes,
Okay.
ma'am. You should not do anything right now, you're welcome, until we tell you.
Okay, thank you.
You're welcome.
Hi. If I remember correctly, and I maybe should know the answer to this, but if I remember correctly, the FISAP indicates any ACA drawn down by June 30th, correct? That's claimable.
It does do that, but for Perkins, there is no longer an ACA. So
No, I understand.
You can claim it for the other programs, yes.
I'm going back to the FISAP in general. So we always have work study that is right up until the very end, and we don't have the timesheets in. Is that an editable field? And can more ACA be drawn down after that June 30th date?
So we actually looked into that June 30th date as we were going to update the FISAP instructions for this year. And the only place we could find that June 30th identified actually in the regs was with respect to Perkins, which is no longer applicable anyways. So we updated the guidance in the instructions to say the draw should be made by the time you're submitting the FISAP, October 1st. And the only qualifier there is that you can't change the ACA after, you cannot change the ACA to increase it or claim additional after the December corrections deadline.
But you can up through the December corrections deadline?
You
Well,
can claim the ACA through October.
Yeah, through October 1, the funds should have been drawn down and spent on the administrative expenses by then. If you didn't report it accurately when you initially submitted, you can make that correction up through December 13th.
I think because of the way the wording is on the FISAP, it indicates drawn down by June 30th, and it doesn't say you can update it through October 1, until October 1, as I recall. So I don't know that that information was
We
clear.
changed it to say it should be drawn down by October 1 and reported by October 1.
But I'm not sure we changed it for the FISAP that you just filed, right?
I don't
We
think
changed that
so.
for the one coming.
Yeah, I think we
Yeah.
might have updated the instructions for
going
Next year?
forward.
21, 22.
Okay,
Yeah.
so at this point in time, there's nothing I can do.
Are you talking about for 18, 19?
Right.
You can make the update to the FISAP
If
prior
you've
to
drawn down the
December
funds.
13th. If you've drawn down and spent those funds and you
Prior
need
to
to
October.
update the FISAP accordingly, you can do that by
But the
December
point is,
13th.
can you draw down the additional?
If you have not drawn down those funds prior to October, then no.
That was the point.
Right.
Okay.
Right.
So you can't
You
change
can
the
correct-
reporting, or
you
you're
can
going to have
correct
incorrect
it.
information.
Right, you can correct it if you drew it down and you just didn't report it accurately on the FISAP.
No, it was reported accurately, but
Then-
it did not
right.
include that last bit of federal work study that comes in right up until in July, actually, before you get the timesheets, which just makes it really difficult. That helps, though, going forward, to know that you
Yes,
can make
ma'am.
the change before October 1. Thank you.
Yes, ma'am. Absolutely.
For the Perkins loans that are defaulted more than 2 years, but are in collection and they are making payments,
I'm sorry, I'm having a really hard time hearing you from that microphone. Would you
for a
repeat?
Perkins loan that is defaulted more than 2 years, they are placed for collection and are making payments with the collection agency. What will the rule be on those?
The last part you lost.
For
ma'am.
assignments, do we still have to assign it if they're making payment to the
No,
agency?
what's going to happen, if you have a loan that is in what we're considering a successful repayment status, that would be considered, you've moved that into a regular repayment status by the annual pay, or excuse me, the monthly payments, even though it's with the collection agency, then you're going to still contact us and you're going to say, hey, we want to keep these loans because this is the proof that we have actively, they're in an active repayment status. So yes, you will be able to do that. Some schools may want to just get rid of them. Some schools may want to remove them from the collections. But if you want to continue servicing those loans, then we'll have a conversation and then your school will be permitted to do that. But you'll have to get permission from us to continue servicing those loans because it's now a requirement by the secretary to assign those loans. But yes, you'll be able to do that. You'll probably end up speaking to me at some point and we'll have a conversation about it.
Okay, thank you.
You're welcome.
Hi, I just have clarification. So in the electronic announcement from October 15th, the deadline date was February 17th, which was President's Day, but I see now on these slides it's
We
February
did change
18th.
it to the 18th because of the holiday,
Okay.
not that it really matters. Get it in before the deadline and then you don't have to worry about it. But we did, because it is a federal holiday, we didn't want to put a requirement on our schools to do something when we were not there if there was an issue for you to discuss with us, if you had problems doing that. So you have an extra day.
Okay.
Yay!
Thank you. And the other question that I have, we have not ever returned funds for Perkins yet. So it's going to be returned through G5. So will we get instructions or will there be like a grant award numbers that we can actually return
No,
to?
so what's going to happen is if you look on our IFAP website and you go into the campus-based processing page, on the right-hand side under the Perkins section, there is a list of instructions that say returning funds to the department. You're going to click on that, you're going to pull that document up, and you're going to follow those instructions and it'll walk you through. Basically, when you are returning funds through G5, you're going to click on, I believe it's still going to say Perkins excess capital or / liquidated funds, but that's the field position you're going to use because we're not going to change the title of the field position.
Okay, great, thanks. And then the other question that I had was regarding the formula for the distribution of assets. So the terminology kind of states that you'll be looking at 2 FISAP years, is that
No,
correct?
ma'am. Nope, if you will pull the new, we're not looking at 2 FISAP years. We are looking at the data that you reported, the data that you just recently reported for the calculations, for the proportional share distribution calculation is what you reported on your FISAP that you just filed and submitted on October 1st. The Perkins service cancellation reimbursement will look at the 17-18 data because that data has been processed and validated. And the reason we can't look at any more current information on that is because our process is an antiquated process. The formula in the system looks at the data when we calculate your funding. So when we calculate funding in April, that's when we look at your service cancellations that you've reported on your FISAP and it updates the information. So we can't do that. You don't want us to wait to give you the money, so we're going to just take a look at the 17-18 data.
Okay, so there will be 2, okay, because I'm just trying to
So
recreate
that's the
it
2
to get
years.
an idea.
But yeah, the distribution of assets process, the only change is that it's going to look at the 17-18 reimbursements, and we're going to tell you what your either partial or full reimbursement should be.
Okay, great, thank you.
Yep. Anybody else? I was wondering if you were going to get up there.
You knew
Hi,
I'd have
Harrison.
to. It's Harrison Wadsworth with Cohio. Just the question, the question going back to the FISAP, and there's the field for the servicing costs that for ongoing loans, and what's going to happen with that? Is that anticipated that the institutions will be able to keep from their reimbursements what they have spent on servicing costs? Or maybe you said that and I didn't understand it. Perhaps you could
We
clarify.
have decided to collect data so that we can make informed decisions and have informed information to the secretary when she asks for it. We do not have an appropriation to reimburse for servicing at this point, but we didn't have a benchmark to even begin to talk about what it would look like if we ever got an appropriation for that. So we, for once, decided to be proactive and be able to start collecting the data and in the mindset. There's no crystal ball that says that's ever going to happen, but if there are some discussions about that, or there's some other mechanisms that will be looked at, we will at least have tangible data that we'll know we'll be able to make informed decisions when we're asked.
Good. I mean, that makes a lot of sense. There is an authorization for use of appropriations for this purpose. So there's not a specific appropriation, but you're authorized to use the appropriation. So who will decide when to use the appropriation that's available, the money that's available?
Well, it's way above my pay grade. The people higher up, our administration, will decide about that, and I really don't have any other information that I can share about that. I think Alana and I just get told what to do, and we do it with a smile.
Thank you.
Anybody else? We have 5 minutes. Oh, nice. No tomatoes. We want to thank you for spending a little bit of time with us. We hope that some of the information we've given you is helpful. Should you have questions, please come up if you weren't comfortable getting in front of the microphone. Have a great rest of the conference, and thanks so much for what you do for our students. We really appreciate all of you.